Hello everyone, this is Rev Trader from RTC University, and this is gonna be a series of videos that I wanna share with you with some of the concepts that I use and specifically how I use them. Okay, this first video gonna be about parallel channels. Okay, if you observe the market, most of the times the market move in some kind of structure, in some kind of parallel channel. Uh, I don't know specifically why. I tend to think that it's a way of traders to navigate the market and find some way of identifying structure in a free environment that everything can happen. Okay, so basically, these parallel structures you can be find in many time frames. I might even say every time frame. Of course, the greater the time frame, greater gonna be the strength of the channel. Okay, if you pair it with other concepts as confluences, it's gonna be really strong. Okay, so how I was saying, we have basically three um, structures. We have a consolidating one. So normally the pi structure interact also with the middle of the channel. Sometimes it goes bound top to bottom when you see pressure both of the buying side and the selling side, and then you have other two structures uh, that are ascending structures and descending structures also. Okay, the main difference that I found, how the people draw these parallel channels and how I use them, uh, it makes a really big difference. Most of the people that I saw using this kind of uh, conceptual structure, they normally want to see four touching points before concluding that is a channel. The difference that makes the way that I use is I don't look for four touches, because after the four touches, normally and most of the times the structure will eventually break for one side or another. So how do I use it? I use it with only three touch points and trying a predictive formula of knowing more or less where the zone of the fourth touch is gonna be. Okay, so something like this. So the price breakdown, you have a retracement, and then the price is somewhat here. And in this example, for example, you are working here with a short position, but you don't know where the price might head it. You don't know. You can have an idea, but you simply don't have a way to know. So the parallel channel can help you, giving you a target for your short idea. Okay, so how do I draw this? Quite simple. You have your angle, these two touch points. In this case, it's your angle of the channel, and this is going to be your pole of the channel or your anchor of the channel. Okay, so you have it here, your two touches that make the angle of the channel, and here you have your pole or your anchor that make the range of the channel. Okay, and I'm going to show you two old examples and one that I'm looking for it to happen. I already shared with you in the Discord channel, so let's get it. So this is, I'm gonna just clear the chart first, and this is the BTC chart. This is an an older chart. This is the consolidation from March till almost no, till almost on October. So this is about 6 months of consolidation in this channel. As you can see, you have here a simple structure. You have here identified lower highs and lower lows until you have this change of the structure as the price make a higher low. Okay, and this is where the parallel channel can be an interesting concept to use. So you have here the change of the structure, so you have here your possibly angle, and you have here your possibly pole or your possibly anchor. Okay, as I usually tell, bigger the consolidation, normally bigger the move, and in this case BTC was aiming probably 100k or higher. That was expected, uh, and you can draw your channel here, pulling your angle from the bottom of the change of the structure, and then your range pulling from your anchor or your pole. Okay, if we place forward, imagine that you enter, for example, a short position around uh, this area roughly. Okay, and then if you play it out, you're gonna see that the price is gonna interact almost perfectly to this channel. Okay, and it's gonna be almost the pico top of the move. Okay, as you can see here. Okay, this is how I use it. It's in a predictive way. I must say this is not um, 100% exact. Okay, this is a way of your predicting where the price might change. You can look then on lower time frames for weakness coming. You can look in how lower time frames, smaller structures changing for signals to look um, for um, for for this this specific structure topping out. Okay, I'm looking maybe in a near future that the price might revisit this zone. There are good confluences here that I can talk about it, but this is gonna be confluences for another, I would say, for another video. Okay, I'm gonna show you another example here on the ADA chart. This is another replay using the replay tool on the trading view. So after you have these two lows in this structure, so it's a down structure, you have these two lows. This is called an interior low. It could be very important, these interior lows and these interior highs. I'm going to show you why. Because if you put here your angle, and if you put at the top your anchor or your pole, as you can see, you're gonna have a lot of interaction with the middle of the channel, as you can see, and this gives I would say a slight um, confirmation or another additional confluences that your channel may be right. And if I play it out, as you can see, the price, it's gonna interact with the top, excuse me, it's going to interact with the top of the channel. If you use it in confluences with other tools like a golden pocket, it interacted, or a liquidity grab in this zone, in this case this zone, as you can see, it's how I use it with other confluences. I'm then gonna talk about it in other videos. Uh, the next example I want to show you, it's an example that I'm waiting for it. I already show you in our Discord. It's in the AV chart. Okay, so you have here your angle and you have here your pole or your anchor, and I'm looking for a touch in this area. As you can see, once again, the middle of the channel, perfect perfect interaction with it. So another confluences that this might be a good predictive channel. Okay, and then you can add confluences to it. You have a trend line here, for example. You're gonna have you're gonna have your golden pocket from the move. You're gonna have liquidity lows, etc., etc., etc. These are all the concepts that I'm gonna show you in next videos. Okay. Thank you for watching. Uh, I hope you enjoyed this simple explanation about one of the concepts that I use, and I catch you in the next video. Okay. See you. Bye bye.